Well, very good evening to you. Here we are, 2026. Give me a little nod if you can hear me, see my screen, see my face. If you like to, you can always put a little post-it note over there if you prefer not to. Good to see you all, guys. Richard, how are you doing? Lana, thank you for the feedback. Thank you, Richard. Good evening, Mark. Looking forward to these sessions. I've been trading a year, so don't really have any direction or method to speak of. Okay. Happy New Year to you. All right. We've got a lot to cover tonight, ladies and gents. We've got a lot to cover. I'm sure you're fed up of everyone asking you how your Christmas was and Happy New Year, so we won't go there. I feel like where we're in we started to trade with the 6th of Jan, we're done. And I do hope you obviously had a good Christmas, New Year and stuff. Oh, am I jerking around on the screen? We'll work it out. Okay, so before we get started, let's have a little look who we've got in the house tonight. Aaron, Arthi, Alana, Andy, good to see you all. Anthony, Barney, Beth. How you doing, Beth? Good to see you. Costa, Darius. I'm just skipping through a bunch here. George, Jason, Jim, John, Joseph, Kirk, Lana, Mark. A couple of Marks. 3 Marks, including me. Mason, Moses, Pamela, Pat, Phil. Goes on. Roger, Steve, Shane, Thomas. How we doing, ladies and gents? Good to see you. Happy New Year to you. Happy New Year. Happy New Year. Okay, so we've got a lot to cover tonight. I'm not going to look at the markets this time. I want to get straight into the thick of stuff. However, markets, Dow obviously super strong. NASDAQ lagging, start to pick up a little bit. Bitcoin struggling still. Metals going flying. It seems like more of the same. I thought we might have a little bit more reaction to the whole Venezuela thing. Hasn't really happened. Crude's gone up a bit, down a bit, doesn't really know what to do. Dollar's really not done much. All the action's been back in silver and gold, not so much gold, but silver, precious metals, platinum, copper. So back to keeping an eye on those. Dow's rallying hard. I just noticed actually while I was waiting for the start on the FT, fund managers prepare for reckoning in US tech sector. Let me say it again, I'll ruin that. Fund managers prepare for reckoning in the US tech sector. And it goes on to say some have reduced positions, have bought insurance. Now, I'm not dug into this too much. How many fund managers? Who knows? FT could have surveyed 2, and that was it. But if you think about, a lot of people think the AI bubble is a bubble, or the AI is a bubble. So I say the AI valuations are too lofty, too frothy. And so they're buying insurance, they're buying puts, they're selling stuff. So that might be why the NASDAQ has struggled a bit the past few weeks compared to the Dow. Bit of rotation. So you got to ask yourself the question, what happens now if the NASDAQ starts to outperform? Do they have to chase to get back in, to get back on this train? Have they misjudged it? If there is a lot of people who are stuck, not being exposed to what they want, who knows? It depends. Do you trade that kind of stuff? Maybe you do, maybe you don't. Okay, FTSE's rallying nicely, back above 10,000. DAX has finally broken out. Took a while. So there's a lot going on. There's a lot going on. I have to say, it's a great time to be a trader. 2026 feels like a bullish year. I mean, bullish for performance. Who knows what would happen in the markets? But I feel like it's a year that we can all step up our game wherever we may be. So, okay, and there's a lot of new people here. So very briefly introduce myself. My name's Mark Holstead. I don't come here saying I know everything. I come here to share with you my experience, which is coming up for 25 years now in markets. I experience from working with other traders, working with other firms, working with newer traders, developing traders, great traders as friends. I've got a kind of a decent vision and view is a better word to say of what I think it takes to become a good trader. Some of the steps, some of the attitudes, mindset, strategies, ways of thinking, that type of stuff. Now, we do these webinars every week in conjunction with Pepperstone. So thanks to Pepperstone for just saying, yeah, go for it, Mark. You cover what you think is going to help traders. So kind of them to do that. Go and check them out if you're not already a client. And this time we're going to do something a little bit different. So today we're talking about trend and momentum trading models. But this is the first part of a 12-part series. Over the kind of Christmas period, I thought to myself, listen, it's all very well sharing, strategies and sets of something. We've covered lots of ground together. Many of you have been here before and appreciate you showing up and and kind of having someone on the other end of this screen for a change. Sometimes you feel like you're talking into the abyss. And obviously I appreciate you watch the recording as well. Those will get sent out as and when. But I thought, what's the common theme here of traders who are, who make a breakthrough, who have their breakout year, who look back and go, hey, 2026 was the first decent green year for me, or whatever that looks like. And starting to think my journey, others' journeys. And, I really think I've kind of pinpointed this step-by-step process. Now, I don't want to, this is not like a marketing thing of, 2 steps to this and 7 steps. No. We're living in the real world here. Trading's not easy. It's tricky. It's challenging. It's tough. But I kind of think I've broken down what I think are the different chunks that will help you move forward in your trading. So, it's a 12-week series. Quite comprehensive, quite in depth. It's not for brand new beginners. Brand new beginners, is such a thing? It's not for beginners, not for brand new traders. I think you work out pretty quickly if it's for you or not. We don't cover the basics, and I do that on purpose because I know there's a lot of people here who are more intermediate, advanced. I'm not saying you're going to be super expert level, but we're not covering the very, very basics. If you're very, very new to trading, then there's other stuff to look at and review, and then come back and join us here when you want. Anyway, I'm getting ahead of myself a little bit. I'm going to describe all that in a moment. Great quote from Stanley Druckenmiller: the best way to make money is to identify the trend and then follow it. That's what we're going to talk about today. However, I need to mention, of course, the disclaimer, ladies and gents. You know this by now. If you're trading with a leveraged instrument, if you're trading a spread bet, you're trading a CFD product, I understand that most people lose money. It is tough. It is hard. It is risky. And so please understand, that there is risk involved. Only trade with money you can afford to lose. Understand how to manage risk effectively, understand where risk comes from, slippage, stop losses being triggered by a gap or a gap fill, not a gap fill, it's price gapping against you. So if your long price opens up over the weekend way lower than your stop, you're going to get slippage on your stop. Just understanding the kind of basics of risk management. It's so important. And anything, of course, if I share strategy ideas, if I share setups, if I share different rules, this is all sort of educational purposes, you like. It's not me saying go out and trade that. I'd never do that anyway, because stuff goes in and out. Some stuff that traded and worked very, very well a decade ago doesn't work today. Doesn't mean it won't work in the future. And some stuff that's been working the last few weeks might not work again. You just don't know. And as a trader, our job is to try to adjust and adapt and use these different playbooks for different conditions. More on that in a moment. So please understand the risks involved in this game. Okay, so I've realized that a lot of traders fail not because they're bad at reading charts. It's actually quite easy, and I think Tom Hugard said that in his book up there, Best Loser Wins, and I agree with him. Reading charts is easy, and if you're honest, you're going to agree with me here. It's a trend. Yeah, it's a trend. It's a pullback. It's a pullback. It's a break. It's not hard to read charts. Now, of course, we can always improve, and we absolutely should be working on different pillars of the trading business, if you like. Okay, improving our technicals. Are we missing the higher time frame? Are we missing this? Are we missing that? We should work on that, but most of us are pretty competent. I think the big issue is the bolting together of random strategies, the pivot of approach every few weeks because stuff's not working. And the big one, and Linda Raschke said this best, is, and she said it slightly differently, never committing long enough to learn anything properly. An analogy I've used many times before, and it resonated with a bunch of you, and you gave me some great feedback on this, is this half-built bridge. So if you're at this side of imagine there's a cliff, there's a big valley, and to get the other side, whatever your goal may be in trading is where you are now, where your goal is, you've got to go over this valley. And whatever that goal is, you're trying to get there. So you build these little bridges, and you're like, okay, I'm going to try to become good at trend trading. I'm going to try to become good at mean reversion, or I'm going to trade the DAX, or I'm going to trade the Dow, I'm going to scalp. And you build a little bridge, and it doesn't quite work. And you go back and say, well, maybe I'm going to swing trade Forex. So you build that little bridge, doesn't quite work, and you go back, and you end up looking back and saying, I've built all these half-built bridges. Nothing's actually got me to the other side. Now, I'm a big fan of pivoting and adjusting when things are obvious it's not what you want to do as a trader. We talked about that, I think, in December. Hey, take an audit and assessment and be objective about the type of personality you are, type of trader you want to become, future pace that and build that around those ideas. I think that's essential. However, we want to really just commit to doing something. I've shared the 40 trade challenge, which Henry B came up with as kind of an extra concept on sticking to 40 trades, running with 40 trades just to try to get some feedback on whether you're good or not. And we've talked about that before, so don't go over old ground. But this 12-week series is really about building your own operating system. You know, we're all very different. We all have very different personalities. We all have very different approaches to the market. We're just super different. And that's good because that's our edge, right? If you're a discretionary trader and you're here because you're a discretionary trader, there's other stuff out there talking about algorithms and building things like that, building bots. Fine. You know, that's a different area of the markets and absolutely fine. I'm sure those guys are creating great things over there. But you and I are discretionary traders, right? We are looking at the charts, we're looking at information, maybe looking at news, maybe looking at positioning, maybe looking at whatever it might be, and you're making a judgment and assessment. And so we need to build our own operating system. So over this next 12 weeks, I want to kind of help you do that. And so January, so we've got obviously 3 months with that. January, we're going to go through strategy playbook. Now, I'm not going to regurgitate old stuff. I've got lots of content on my website. If you go to tradersmastermind.com, you see the previous webinars on there. Pepperstone has some of the older webinars up on their YouTube channel. We've got trading strategies, mean reversion strategies, news, stuff like this. I'm not going to regurgitate stuff. What I am going to do is share with you playbooks, but I'm going to always add a little bit of extra spice, if you like, a little bit of extra flavoring, because you're ready for it, right? You've been trading for a while. You know how the markets kind of operate, but you're just probably trying to find your feet and find some stability. And so often I've spent time thinking about this a lot and looking at feedback and look at this. Often the stuff that really helps traders kick things up and get to the next level, the next station, is a light bulb moment. It's a different way of looking at things. You guys laugh at me and you always joke. I'm like, put different, look through the market, look at the market through a different lens, look at it from a different perspective. And I'm always saying that because I think it's so true. Very often as traders, if we do that, it can unlock a different level of trading. So there's going to be a slight difference in how we cover this. It's not going to be rule by rule based, even though we'll share some rule based strategies with you. There'll always be a little flavor, a little twist, a little something you perhaps haven't heard before. And hopefully it's that one thing that just sparks a difference, a change. Because don't forget that it only needs that one thing to think about things differently, to have an aha moment. And that's often an unlock. You've probably got a bunch of knowledge. You've watched a bunch of content, YouTube videos, read a bunch of books, listened to a bunch of podcasts, done all that stuff. It's just sometimes going, well, yeah, actually, that makes perfect sense. Looking at it like that. So we're going to cover today trend and momentum trading models, mean reversion and compression models next week, failure and trap-based models the week after that, time of day and news trading models after that. In February, we're going to kind of cement this up a little bit more, choosing your specific trading strategy, helping you do that from a personality-based aspect, from all the other things that we've talked about before, how much time you've got. If you are working, you're trying to wrap it around trading. I know that's the majority of you traders out there. You don't have all the time you want to sit in front of the screen. That's okay. We can work with that. Why good strategies fail, good traders, learning from losses and how to, not dwell on stuff too much, but not sweep things under the rug. So we're actually using and leveraging on our experience as much as we possibly can. And risk is a dynamic variable. We'll go into that in a bit more depth. Then March, building consistency and longevity. There's no point. There's a lot of these traders out there like, I made this much money, and then they disappear. Right? It's not the game you want. You want to build something, a skill that you've got for life. How you use that is up to you. If you want to become a trader and stay being a trader for decades to come, great. You adjust and adapt. And I'm in that camp. I'm like, hey, I've been trading for a couple of decades. I want to trade a couple more. I love it. I enjoy trading. But maybe you don't. But we're trying to develop this skill that you can use it, and however you see the best way for you is, whether that's changing your style and strategy, whatever it is, but it's a really useful skill to have. So I call this quiet trading skills that help create consistency. So some of the things that maybe not discussed and thought about before. Trade development phases, so how to work out where you are and then how to calibrate and adjust for that to take yourself to the next level, so you're not just repeating the same old levels again and again and again like a computer game. Trade identity and self-sabotage, and building your own trader's operating system, bringing the whole thing together. Now, each session does stand on its own, as I say here, but together they will form a framework. So I appreciate you may not be able to come to everyone. You may not want to come to everyone. The recordings will be sent to you if you can't. I appreciate you showing up. And one thing I've noticed is the people who tend to make the most progress. And by the way, I'll do this if there's 2 of you or 2,000 of you. If you know me, I like talking about the markets. I enjoy trading. I'm in the thick of it. And this is just something I enjoy sharing, information that might help you. But if you come to these webinars live, That something there just tells you you're serious about stuff. You can pick up a YouTube video when you're, in the bathroom, wherever it might be, scrolling through, right? Everyone's doing that, but showing up to something you feel like, hey, I'm actually taking this seriously. I'm taking some notes. And by the way, it doesn't have to be my thing. You can look at others. There's plenty of other guys out there who are maybe sharing stuff and ideas. But I think that really activates something in your brain that says, I'm serious. I'm taking this seriously. It's just like a performance meeting. It's like I'm going to, even though it's webinar and we're doing this virtually, of course. It's just like unlock something in that says I'm taking this seriously. Okay, so back to what we're trying to cover today. Why strategy comes first. Listen, we know that you could have the best strategy in the world, but if you can't stick to it, you ain't gonna make any money. Nothing's gonna happen, right? So I've talked about these pillars, right? We need to have a strategy that has edge. We need to have the discipline to run that strategy. We need to have effective risk management. Any of those that are broken, it won't work. If you don't stick to the strategy, you don't stick to the risk allocation, it's pointless. The foundations will crumble. If your risk management is skewed and you're trading too much risk on a really good strategy, but you're following it to the letter, again, the law of averages and the variance of the performance of that strategy is going to crumble the foundation. Similarly, you can be absolutely dialed in, perfect with your risk, but if your strategy sucks, you're going to lose money. So let's start with strategy. And really we want to have a strategy that fits your personality, your time, your temperament. And we will cover that some more detail because we're going to look at trends and momentum stuff today. And we have to have edge, right? Otherwise, everything else is pointless. Now, one thing I want to say about edge is, we never know for sure. We never know. I don't care how, your market wizard, whatever. You don't know if your edge is going to persist and continue. But the good thing about being a trader is that you adjust, you adapt, you tweak, you find an edge, you find strategies you think are effective in certain conditions, and you deploy them. And this is the key to being a great discretionary trader, is to be able to identify the conditions and say, I should be doing this type of thing. Okay, what have I got in my arsenal for this? I've got pullback buys, I've got this, I've got break. Okay, what really lends itself in choosing the right tool for the job? There's all very well having this, if this, then that approach, and fine. Maybe you need to do that to iron out your discipline to get your results a little bit better. But as you develop as a trader and you improve, you're going to want to be adjustable, and adaptable is a better word than adjustable. Okay, so January is about covering a lot of different things. So let's get around to trend and momentum, or trend versus momentum, should I say. I don't think these are the same thing. And again, I don't stand here and say I don't have all the answers. What I say is right. I just know what I think is effective for I've seen others work with and think about and frame differently, and stuff that has worked for me. And that's all I can share with you guys. You can adjust and adapt it to see fit. So I think these are two different things, right? They're related. And of course, markets are not black and white. Sometimes a trend turns into momentum. We saw a little bit like that with the metals. Sometimes momentum turns into a trend. You start with that ignition and then it turns into a trend. But they're two different things. And I think the issue that many traders have is if you're trading in the same way, it can cause problems. So what actually, and let me give you an example of this. And I think I've recorded a podcast that's kind of covering this same stuff. So spoiler alert, you get this. If you think about this, you've probably been in a situation where you've watched a trend and you've said to yourself, I want to get long. And you've been patient, you've been a good boy, been a good girl, wait for the pullback, bought the trade, off you go. You're going to realize it's ticking up. Nice, here we go, off we go. It just stalls out a little bit. Price just sits there. You go, no problem. I'm in a bit of profit. I'd like a little bit more here. I'd like to get a bit more cushion, but yeah, so far so good. And the price just sits there, a little bit higher than it was. Maybe it's a fresh highs for the month, fresh highs for the week, whatever time frame you're trading on. And you start to get a bit impatient. You start to see it pulling back a little bit. You start to see it basing out, and you go, this thing better go soon. If this thing doesn't go now, I'm going to dump it. Red candle comes in, you cut it, you've made a small profit, you're a little bit frustrated. And so you walk away. You come back maybe later on in the day, a few hours later, and you realize if you held that trade, you'd be up 5, 6, 7, 10R. And that really annoys you. And you think, what have I done wrong here? My strategy was effective. I got a good entry. I gave it enough room. And what am I supposed to do? The problem with this is that your brain is calibrated for, in that case, a more of a momentum trade than a trend trade. Versus, if you think about the difference between the two, and I get ahead of myself a little bit because there's a slide for this, but I wanted to kind of think of this concept now. When price is in discovery mode in a trend, we want it to stall at highs. We want it to be happy there, base there, and feel good about being there, so that becomes the floor for the next leg up. When you're trading momentum, a stall is actually a threat. You're there, you're seeing momentum, bid, up it goes. People are chasing, you're riding that wave. You don't want it to stall. And so even though it's the same, it looks as similar on the chart. Very often it's going from A to B. Maybe the actual point A and point B are similar, but it goes there in a different way. It's just making sure that your mind is in the right frame, in the right perspective here. So first of all, let's define a trend. A trend is pressure. I think it's a sustained pressure, often on a higher time frame, and we don't need to overcomplicate this. Some people will look at an ADX reading. Some people look at distance from moving it. Whatever. I don't care how you do it. You just need to be able to define a trend, and you can define a trend. I can show you a chart and you go, that's a trend. That's a trend if I squint. Oh, that's nothing. You get this, right? We want a trend. To me, is something that doesn't rush. It just grinds, and it's just relentless, like we saw in gold before it really started getting going. Late August, early September. It just finally started with a little bit of a breakout, and then from September through to kind of the late October, it was a trend. It was a steady chugging trend, more green than red, some pullbacks, a little burst, but it was generally a trend. Versus momentum, which I believe has a sense of urgency to it. And for example, a moment, it's fast, it's aggressive, it tends to be much shorter lived. Now, can momentum carry on for longer than you think? Of course it can. That's how shorts get trapped. They see momentum, they short it keeps going, and they add fuel to the fire because they're covering. But it's about expansion, price expansion, volatility expansion, range expansion, and it's not patience. The participants are more time sensitive than price sensitive. So a concept that I think helps you visualize this is, and there's a great example there. Momentum, as we break out on gold in that March period, that's momentum, bang. Then it kind of settled out and gone into a trend a little bit later. But there's a very different style here. And one thing I want to think about is this price sensitivity versus time sensitivity. This concept, I think, helps you think about things clearer. Is, hey, on momentum, you want to get you want to get in, or traders want to get in, or they want to get out if they're short. They just need to buy. There's an urgency about the buying. They are more time sensitive than price sensitive. They're like, I don't care if I pay 2,090. I just want to get, in this case of gold, I just want to get in. Versus price sensitive trader says, I'm not paying higher than 2,080. That's how you get ranges. That's how you get slower moving environments. When people say, I don't care, they're using market orders, they're paying up, they're lifting offers. That's when you get momentum. And momentum fuels more momentum. It fuel until eventually it runs out of gas. And most of the time that's because the buyers have dried up and looked around and gone, hang on a second, it's come a long way very, very quickly. Why are we so urgent? And that's obviously a separate conversation. But this distinction between the two, the trend and momentum. So I'm building this up into to show you some rules and other things, way of thinking about this. A car analogy is perhaps a good one to use. Trend trading is cruising on the motorway. You're sitting there, 80 no officer. You're not sitting there 80 mile an hour. You're sitting there at 70 mile an hour, officer, cruising on the motorway. You just on and off the throttle, right? Assuming it's a clear road. You slightly just kissing the throttle, maybe a little bit more up a hill. You get the idea, right? If you drive a car, you know the difference. Momentum trading is matching the throttle from a standing start. You're at a light, you're in the wrong lane, you got to get ahead of everyone. Bang, the throttle goes down. It just builds and builds and builds and builds. Acceleration is what builds the speed, and it just goes quicker and quicker and quicker to the point where you're braking or whatever. So, not the best analogy, but that helps you think that even if you come off the throttle when you're on full throttle at the start of a traffic light, right, you've gone up to 10, 13 miles an hour, you back off the throttle, you feel a deceleration. Even though you're still accelerating, you feel a deceleration. You come off the throttle when you're cruising on the motorway, you don't feel it as much. It's the same with price, the same destination. It's a very different experience. Okay, this is important. Mindset matching. Hopefully you worked out that you kind of seen my thinking behind the trend versus momentum. And again, you don't have to agree with me, but I think we've all agreed that there's differences. The actual definitions maybe differ, But I think we're in agreement that they look different on a chart. The price action is different. The participants different. The urgency is different. Fine. So this is a great example of this. Mindset matching. Different strategies require a different mindset. Just like I described earlier, if you are long in a trending environment and you have the mindset that you're trading a trend, I'm a trend trader, this is a trend, I believe in the trend. And by the way, as a side note, if you're trading a trend, you've just got to have belief in it. You've got to have belief the trend is gonna continue until it doesn't. And you have to have that when you're trading and you're trading with a trend. Otherwise, you won't trade it effectively. You have to. I don't know what's causing this, and maybe there's a macro underlying rhythm that a reason normally is. Maybe you're aware of that. You should be, I think, as a trader, should be round enough to understand why the trend is happening, what the market drivers are. It's liquidity. It's this. It's that. Fine, but your belief has to be this is going to continue indefinitely almost. And I'm going to be long gone before it reverses. You have to have that in a way for a trend versus momentum, which is I'm in and I'm out at the first sign of weakness. So think about this, matching your mindset to the environment you're in and the model you are trading. If you are long a trend, the market goes up, it starts to pull back. It's an opportunity for the market to base and form another leg higher, as I said earlier. If you're trading momentum and you see that and you're like, do you know what? I'm relaxed, I'm calm, it just needs to pull back, I'm trading it from a trend trader's mindset, you're going to lose money. And so think about the differences. Even though it's long, it's technically the same thing. I'm long from here, I'm long from here. It looks identical on your blotter. It looks identical. But the mindset, and obviously the operational side of stuff has to be different. Your target is slightly different. We'll talk about that in a moment, your stop, etc. But the mindset behind it has to be very different, because that's the thing that helps us as traders perceive price as an opportunity, as a threat. Do we exit? Do we add? What do we do, right? And you make the ultimate decision, but it's how you process stuff. It's a really crazy analogy I had last night thinking about this. If you are let's say you support Arsenal football team, right? Those of you who are in the UK, Arsenal London team, and let's say you're playing Spurs, Tottenham Hotspur, another London team, Derby, there's a rivalry, blah, blah, blah. Arsenal playing red, Spurs playing white. And let's imagine you're an Arsenal supporter, you've got an Arsenal shirt on, and you've just won, you've just beat them 4-0. You're feeling happy with yourself. You walk down a back alley in somewhere in London, right? And out of a pub come 10 lads, they've all got Arsenal shirts on. What's going to happen? You're like, well done, like, a bit of banter about a goal. Maybe because they're drunk, they're going to be faux heading an imaginary ball and all this type of stuff. There's no threat there. Like, it's just some lads who are having fun. You're an Arsenal supporter. Now, imagine you're walking down that same road, that same back alley. You've got your Arsenal top on, you've got your Arsenal scarf on, and out bundled 10 lads. This time they're wearing Spurs shirts. What's the change in sentiment? The change in sentiment there is, oh, beep, I need to get out of here, because these guys are already pretty annoyed the fact that they've lost. They're going to see me. They ain't going to be too happy. It only takes one idiot in there and I'm a dead duck, right? Or dead duck. But you get the point. The why I'm saying this stupid analogy is that it's how you perceive. There's 10 lads coming out. There's not much difference there. They're just wearing a different color shirt. But the perception and instant feeling that you get in the brain is going to be very different depending on what color shirt that is and what color shirt you've got on. It's the same in trading, right? If you're on a trend trading mindset, you want pullbacks and basing, because that gives it a new level, a new floor. You expect them to take the time. You don't want to see it rushing, because if it rushes up, then it suddenly turns momentum. You've got to adjust it, the way that you think about stuff. Pauses are just confirmation, right? And you have to have patience. A trend takes time to build and grow. You don't get massive ranges in trends and grinding trends. Now, sure, it's not black and white. Sometimes you do get it's kind of expansion and stuff. But generally speaking, you want the grindingness. And that's a very different mindset. It's like, I believe this trend is going to continue. I'm happy to sit with this. I've got patience. No big deal. I'm happy. Chugging along versus the same market, the same position. I'm long, but you seeing it rush up. Range expansion, big wide range bars, and you want to see any pause as a reason to get out. You're like, I'm going to get out now because I don't want to see, if it's stretch and stretch and stretch. We both know what happens when markets get stretched. Very often they pull back. Now, do they pull back all the way? Not all the time. Occasionally they do. but they're going to pull back, and then you're kind of sitting there going, oh, what do I do? Could stretch the other way. It's a very different feeling. So momentum, your job is to jump on as the market's rallying, as it's picking up steam, and as soon as it stops picking up steam, as soon as that momentum starts to wane, you're out. That's the job of a momentum trader. So when you see a pullback, when you see a pause, you want to get out. And that, again, it's the same trade, but you have a different mindset. You're mapping your mindset to the actual trade you're taking. And this is where a lot of traders screw things up, because they say, oh, it's a trend, it's an uptrend. Yeah, but actually, it's actually momentum, and you need to be on point. You need to be ready to exit that trade. You can't be sitting there all patient going, la, 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 you're fine, it's looking good, I'll let it pull back. Because it'll just pull back, and you'll be there in a situation going, what do I do now? It's pull back all my gains. I don't really, it looks like a reversal, and you get confused. So understanding what your objective are and what you're trying to achieve. You need that decisiveness. You need to you just think of it in a different manner. So think about that, the way you're mapping your mindset and how you're approaching the market. And I think it's so important. I think it's one of the biggest, kind of most powerful things that, you can think about as a trader. And it really blends the two, by the way, of strategy and mindset and psychology and discipline, even though often we look at them in different realms. We go, I must be disciplined, I must have the psychology to not get caught in FOMO and stuff, and I must have the strategy. This blends the two, understanding that you need to be malleable in your brain to be able to trade different ideas and strategies and approaches. And many traders, I think, make the mistake of trying to employ a single approach. I must hold my trades. I must be patient. Well, it's a good general rule, patience. I agree. I don't disagree at all. But if you're momentum trading and you're trying to find the peak of where that may turn, you don't want to be patient. You really don't. You want to be out of that thing as soon as that sucker looks like it's turning or pausing, that tape starts to flip. You want to be gone, right? So, yeah, sure, patience. But I think the problem we have as traders is we're like, I must be so patient, or I must be, super disciplined with this, or I must let this trade run, or I must, it varies depending on the model you're deploying, and each trading strategy demands a different way of thinking. So just to kind of think about this a little bit, when you're trading, you want to remind yourself, hey, I'm going to accept pullbacks, I'm going to accept chop, I'm going to accept boring periods. That's how a trend grows and develops. If I can't sit through that, I shouldn't be a trend trader. I shouldn't be deploying a trend trading model. I should be trading momentum, mean reversion, news trading stuff we're going to cover in other webinars. And this is where it comes into mapping it to your personality. But you can't force your will on the market. It's going to pull back. It's going to do this stuff. I covered this stuff. If you've got a mismatch of you're thinking, I don't want to give it too much room, or I've been sitting there doing nothing for a day, I want to bin it. That's just a mismatch with how you think about stuff and the model and the strategy you're deploying. So let's talk a little bit from operational side about how we could get into this trend and how we link it up with our mind as well, because I think that it's all very well looking at operations and how we get into trades and stuff, but the key, and this as well as I do, is you can have the best rules in the world and be using the best strategy in the world, and you can get very different results from another trader who does the same thing. And this is when it comes down to the mental model and how you think about stuff and how you perceive price. And obviously a lot of this sometimes is polluted by emotion, right? If you're sitting in drawdown and the market starts to pull back and you're long, it's not just you maybe miscalibrating to conditions, it's also maybe you got a little bit of emotion coming in from your recent performance. So I get that, I understand that, but realistically, let's go back to operations. Three ways to get into a trend. Early reversal, so you reverse your start of the trend, pull back and breakout. I'm going to focus on the last two for now, pull back and breakout. It's a slightly different approach. I think a reversal should be looked as a reversal, and then it migrates and morphs into a trend trade. But we'll discuss that another time. So let's talk about pullbacks versus breakouts. And I know this is bread and butter stuff. I know this is trading 101 for many of you, but we want to link it with, I want you to, and if this is, maybe a bit simplistic for some of you, and we'll get to some more interesting stuff in a moment. Start thinking about how your mind perceives these things. How does your mind perceive it? Because that's the unlock as a discretionary trader, how your mind reacts with price and interacts with price, your P&L, your equity curve is the thing. That's the edge. It's as simple as that. Your strategy is a 10 a penny, but it's how that interacts with all the moving parts of a trader, how your brain interacts with all the moving parts of a trader, that really makes sense. Okay, so breakouts versus pullbacks. I don't think neither is better. It's fitting it again to your style and future pacing what you expect from the market. So a little simplistic way, because I wanted to share kind of some stuff with you, but many of you guys know, you have your ways of getting in on pullbacks anyway, whether it's a moving average, whether it's an oscillator going from overbought to oversold, whether it's a period of time. But what I really like to do is to just calibrate the conditions. So you've got a period of calibration where the trend is kind of getting going, it's broken out, and you kind of can see, well, this is silver futures chart, by the way. You kind of see roughly what the pullbacks are in points, percentage, pips, whatever you work in, and use that as a framework to move forward. Now, this is a 1 hour chart. You could be on a 1 minute chart, although slightly less efficacy, I think, on lower time frames. But you're kind of saying, okay, where do I want to start looking for buys? And this is the key thing. If you are trading with the trend, as I said before, you have to have absolute belief that this is going to continue. If there's any doubt, this is not the trade for you. By all means, you can still take advantage of the longs. You can still trade a momentum model if you think the market's going high, but you're a little bit nervous about it reversing. But you must, if you're trading with a trend, you must have that certainty that, hey, I think it's going to keep going for another few months, another few years, whatever it might be. You must have that certainty, because if you don't, then every little dip against you is going to be like, this is the top, this is the top, this is the top. And good trend traders don't do that. Good trend traders go, you know what, I don't know where the top is. It'll tell me where the top is. And you might have some ideas on what that might look like. So, calibrating conditions happens to be silver, could be anything here. I'm just marking high to lows and saying, listen, it's 4%, 4.6%. All right, I got an idea. I want to be buying at about a 4% pullback, maybe a little bit less. I could buy at a 3 and a bit percent pullback. My stop, probably I need to come out if we go to sort of 6%, 7%. First one there, you might have got stopped. Next one, you see what you're doing here. You're trying to work, and this is where I think where traders get this overcomplicated. I'm not, by the way, this is my least favorite way to trade, is being just committed and just saying, okay, I'm just going to hold my nose, buy on the pullback, and assume this trend is going to continue. Rare exceptions. Sometimes there's been a reprice scenario, and I think that as a catalyst that's fundamentally shifted stuff, and maybe that needs time to play out, then great. I like that sort of stuff. But generally speaking, it's probably my least favorite of the bunch, just because you have to have just pure belief the trend is going to continue. Otherwise, everything becomes a threat. I mean, you can't trade this on the long side, but just if you're looking this kind of pullback approach. So that's it. Pullback approach, you're just trying to calibrate to conditions and adjust, and then future pacing those conditions to time your triggers on the long side. Okay, this, did I miss a slide here? Okay, so let's go. I think I've put a slide in the long way around. So imagine there's this other way of trading, the trend, exactly the same chart here, is to buy a breakout. And this is easy stuff, guys. I know this is simple stuff, but the psychology is very different. Okay, so if you bought a breakout, a general rule of thumb, a good rule of thumb, and again, my rules, you adjust to suit you, is if again you're fully committed to the trend, you believe the trend is going to continue, you want to buy when it breaks the prior session high with a stop below the prior session low. That's going to keep you in a decent trend long enough, right? It gets you out, it gets you sort of in when it breaks. It's pretty systematic. You're adjusting your stop and calibrating it to the volatility of the market at the time. It's a pretty good way of getting on trends and holding stuff. And so a visual for that would be this. So you got Monday, there's your high. The next day, your long is triggered. Your stop goes below the prior day's low. You get the idea, right? There's nothing complicated about that. Now, it's to sort of cement the rules a little bit. The pullback strategy, percentage calibrates conditions, set your stops at a typical movement plus X%. So if you normally get 4%, maybe you go plus 50%. I'll set them at 6%. That way you risk in the 2, and then you know that just gets back to highs. We've got 4, and then if we carry on trending, so you can structure the risk-reward ratio of the trade pretty well. In a breakout strategy, you can kind of place a stop under the low. Now, this is, and we talked about different entry points that you can maybe do in a trend. A moving average pullback, oversold oscillator. So if you're long, the first oversold, or an oversold on a stochastic RSI, CCI, and there's other things out there that you might like to use, fine. Maybe you want to get involved in a flag. I think these are working a little bit less, and I'm going to talk about that some more recently. These traditional price action patterns are changing, they're evolving. Maybe it's because a lot of retail traders are using them. I don't know, but I'll share more on that in a moment. Okay, so why are we talking about this? Think about psychology. If you think about the psychology of, you know, if we're committed to the trend, we have to have that. If we're not committed to the trend, very difficult to take the trade and hold it. You know as well as I do. And how many times have you done this, right? You take a trade, you're like, it's an uptrend. I'm going to buy this. You buy it, and it sits there, does nothing. It does nothing for a day if you're a swing trader. And you go, oh, it's not doing anything, I'm going to cut it. And then you come back a few days later, or you bring it up on your watch list and it's rallied. That's because you're not committed to the trend. So you have to, and this is why I think it's quite challenging sometimes to operate like this. We have to be fully committed. And then when you take the trade, your mindset's got to be, well, I've bought the pullback. This has been in line with the pullbacks we've had before. I've got no reason to worry. I've got my stop. I've understood my position size. I'm just going to walk away. And that's how a lot of trend traders trade, by the way. The trend model is literally buying pullback, holding, and they'll do some adding and this type of stuff. So it's a very different approach mentally from buying a breakout and saying, okay, I'm going to have a breakout here, a stop below the prior day's low. Now, a lot of people don't like doing this because they feel like it oversimplifies you know, the market. But honestly, I've got some super complicated ways to trade, super complicated. But they all come back to what's the filter? And the filter has to be, I believe this market's going higher, or I believe this market's going lower because of X. And so that's your North Star. That's your kind of reference point. That's going to be the rising tide lifts all ships. So that's always going to help you out regardless. Okay, so let's talk about momentum entry. So this is something I like to trade. I do prefer momentum. Maybe you do too. And again, the mindset's different. Like, I don't mind coming out of, if I'm long and I catch a good move, a good couple of day move on a market, or a good couple of hour move, if you're that, or a good few minutes of a move, and you come out and it carries on, I don't mind. I'm at peace with that, and you should be too, because you are going in with the mindset of, hey, I'm here to catch a chunk. I'm a momentum trader here. I got my momentum trader hat on. I need to come out of the first sign of threat. And the first sign of threat is going to be X, or it's going to be Y. You define that for you. Is it we start pulling back 2 5-minute bars of red? Is it whatever you kind of look at it as? And then coming out, and even if it does continue, you say, well, I've done my job. My job was to go in and to capitalize on that swift repricing scenario, whether we're breaking out of a range, whether we have a wide range bar as a trigger, engulfing candlesticks as a trigger, whatever it might be, a catalyst, a news failure, as Shapiro calls it, whatever it might be, you've got to kind of break to the job. And so the mindset is very much, I'm on point here, I'm watching it. If I'm in momentum, I'm surfing a wave, at any point I need to get off this thing. It's a different approach to the trend trader, even though, as I say, on paper, the blotters might look exactly the same. You're long from a specific level. So think about this, right? What do you like to trade? Do you like momentum? Do you like trend trading? You can do both, but you must wear different hats. You must have the calm, patient. I'm going to sit here. I'm going to sit through pullbacks. It's going to take some time. Then realize it's going to be choppy. Can't be staring at that. I can't be worried about short-term price action on the 1 minute when I'm trying to get on a daily trend. I can't be thinking that. Versus momentum, very much time frame focused. What time frame are you momentum on? Is it daily? Is it 1 minute? Is it 5 minute? What is it? What's the momentum? Because that's the important aspect that you're calibrating to. You need that kind of decisiveness. So are you a trader who's decisive? Are you able to sit in front of the screens and watch momentum? Or do you prefer to wait? Do you prefer to sit in a position? You've got the belief in your mind the trend is going to continue. You're happy to hold it until whatever it takes and it resolves. So there's a lot to this stuff, even though, and this is kind of why the simplicity of the entries. We're not talking about anything super complicated here. We've got some advanced stuff at some point with the different models coming up for sure, but it doesn't make it any more profitable or expectancy to go any higher. And the why I kind of wanted to talk about these two things today specifically is that the unlock is the mindset you attach to it. It's that's how you think about price once you're in, and understanding why you're in the trade is the differentiator. any trader can say, I'm long because I think it's going to hit here. Okay, that's great. Okay, well, what did you get in? I got in because it was a breakout. Okay, great. That's good. So what sort of trade is this? Is it, well, I'm long. But, it's more of a momentum trade. Is it more aggression here? Is it, and the definitions can vary. And they might not be able to answer that. And so they don't know how to perceive price. And the worst thing you can do, and by the way, you may have done this. I know I'm certainly guilty of this, or have been guilty of this. And luckily, with time, as you get more experience, these kind of things don't come up as much, just from pure time under the belt, so to speak. But you get in a position where you flip-flop between the two mid-trade. So you kind of get in a trade, you flip momentum, then you go, well, I'll hold this because it's a trend. And then you kind of go, no, it won't get momentum. And then you get the worst of both worlds. And they never turn out to be great trades. And it just goes A to B really, really quickly and kind of gives you a little gift. The best trades come when you have the certainty, you have the calmness, you future pace exactly what you think the trade is going to do, how you will respond to that, and making sure that your actions are aligned with your vision for the trade. And that's a common mistake, which I mentioned before, is wanting kind of big trend rewards, multiple R's on the trade, but scalping out because you still have your momentum hat on, and you don't want the momentum hat on. You want the momentum hat on for momentum only. You want a trend trading hat on. You want to come differently. You want to. If you think about, if you're going out to, a fancy restaurant versus, a dive bar, you approach differently, right? You wear different stuff. You think about things differently. Your drinks are different. I know it's just stupid analogies, but it's the same in trading. Like, even though you're drinking a drink, an alcoholic drink, you're trading, you're doing something very, and bad analogies, got compliance will not like this one. I'm not saying drinking and trading. You get the point. I'm the useless king of analogies. But the point is that similarities are there, but it's a mismatch. If you show up to a nice fancy restaurant and order a cocktail and you're dressed all scruffy, you ain't gonna get the best out of it if you get let in. Versus, you go in with a kind of dinner jacket on to a dive bar or whatever, and people are swinging back, beers, and it's all super value pictures or whatever it is. Again, you're not gonna get the best out of it. It's not gonna be you're gonna leave early because it's not right. Stupid analogy. Bear with me with it. Same with trading. You have to have that mindset of, okay, you know what? I need to be thinking that this isn't a threat, this pullback. This is normal. This isn't a problem. This is normal. What environment are we in? What model am I using for this? What mindset do I need? And really thinking about, what are you thinking? Thinking what you're thinking, auditing your thoughts, and saying, am I perceiving this price action in the correct way? I see this tape flipping and reversing on the short time frames. Do I need to be acting on this? Should I even care that it's doing this? And if you're a trend trader looking for a multi-day move, the answer is no. Or if you're looking for the close at a higher day, the answer is no. But if you're a momentum trader and you see it changing, then yeah, you get the point. You have to be calibrated, and the mindset has to be spot on for your trading momentum, your trading trend. Now, entries are reasonably simplistic: momentum trade, engulfing bar, wide range bar, ignition bar. Anything that kind of stands out like that is going to help you get in. Stock goes below that. You know this by now. It's a pretty simple stuff, but that's treated as momentum. Maybe it turns into a trend, but it's got to be treated momentum. Okay, so get all caught up momentum and think I'm trying to think of other analogies, but I won't burden you with analogies. I won't burden you with that. So next week, we're going to talk about mean reversion, and then after that, failure models, time of day strategies, news trading, and stuff like that. And most importantly, I think the mindset that has to go into it and how we can prepare ourselves for trading in that different way. And hopefully, I say, like, by March, we'll have this complete framework and an operating system to kind of help you with your trading. Okay, we've covered a lot of ground. We have covered a lot of ground, and actually, it's done a reasonable time here. So if you have any questions, ladies and gents, I'll be happy to hear them. Obviously, thanks to Pepperstone for being here. If you want to check out Traders Mastermind, you can do. I've got a discipline tracker that's free. 34,000 of you are using that. Unbelievable. It's a Google sheet. It's a template, totally free of charge. I had it coded up by a Google wizard to help, especially new year. Actually, it's great for this, to help improve your discipline in trading. You just kind of work through it. It's all self-explanatory. If you go to my website, tradersmastermind.com, top right, you can download it there, and you can be the 34,001st. I think we're at 35,000 now, but yeah, really helps a lot of traders that. Okay, If you've got questions, happy to take them. Well, let's take a breather. This is going to be a good series, guys. I know it is. Okay. It's being recorded. Yes, it is, Steve. The recording will come your way. Gary says, great stuff as always. Happy New Year. Happy New Year to you, Gary. Bradley says, the king of good analogies. I'm glad that someone appreciates them, Brad. You know, when you're mid-flow, and you're like, this analogy is going to work great, and then you're halfway through and you're going, it's just absolutely sounds awful, but I'm committed now. I'm pot committed. It's stop or target this one. I can't pull out the trade anymore. But I think, sometimes it's just thinking a different way, and my mind works in a crazy way sometimes. That was really helpful. Thank you. I appreciate that, Richard. Rhino Trader says, thanks, man. It makes sense to decide on which hat to wear. Good. Yeah, I think that's the key, Rhino. Rhino. I think that's the key, mate. It's such an unlock. And I think if you try it, if you listen, not just Rhino, but anyone listening, if you try it and you think about, hey, how should I feel about this trade? How should I feel about price jetting off to the moon and I'm long? How should I feel about price pausing? How should I feel about, all this type of stuff? Because that helps you then go, whoa. You're perceiving this as threat here just because you're looking at unrealized P&L tick lower. A true trend trader would not care. And sometimes you have to step back. Sometimes that's a bit of discipline required in it, but that helps you weather the storm. That helps you, use the right tool for the job and stick to the reason you got into the trade in the first place and not flip-flopping halfway through. So thank you for that. Panos says, win rate or RVR, what's more important? Oh, Panos, I wonder if you're a plant, because you'll get me going on my two levers to pull. It's been a while, new year. So I think you've got two levers to pull in trading. You've got RVR, which is your risk reward ratio, and you got win rate. And our job as traders is to have both of those as high as possible. In a perfect world, we'd have a massively high win rate and a massively high RVR. It ain't going to happen. So we want to kind of adjust the two. Now, this comes down a lot to the style you're trading and your personality. Some traders are very happy having a low win rate but having a massive high RVR, 10 to 1, but they're losing kind of 2 out of mental math, 7 out of 10, let's say. That's going to work very, very nicely. Even 8 out of 10 is going to work very nicely if you're 10 to 1. And they're happy with that. But if you're the type of trader who doesn't like to have losers, and that's okay, by the way, no one likes to lose, and maybe just work. Some people actually are fine with it, but maybe some people just like, it starts to grate after the fifth. I start to second guess my strategy. I start to deviate. I start to do other little things, and fine, that's not right for you. So there's a personality fit with that. Understanding which lever, how you want to say the thing, is important to you. Okay, but as a trader, you have a rough idea of, okay, well, I'm making like 2 to 1 here, and I'm about 55, 60% here. I've got a slight edge. You start to say, okay, what am I going to focus on first? Do I want to improve my accuracy, my win rate? If I improve my win rate, I need to get better at my entries. I need to get better at, my stop placement needs to be adjusted. I need to be more precise. I need to, there's a little execution, operational consideration there that you have to work on. And you say, right, I'm going to work on that. Or you say, I'm going to improve my RVR. Okay, there's multiple ways of doing it. I don't want to go off a tangent too much here, but that might be, hey, can I go back and look at my maximum favorable excursion, my MFE on my trades, and say, actually, I'm leaving a lot on the table. I need to come out a little bit earlier because very often trades are going in my way, say 100 pips, and my average exit is, say, 80 pips for my winners. Just using rough figures, I could probably stretch a little bit more, which would improve my RVR. So the idea here is that you identify one that you're going to work on. You say, hey, and by the way, I think they're both equally important. I get personality thing of which to choose. I'm going to work on that. What am I going to work on within that sphere that's going to help it? I'm going to work on running the trades that I believe should be run further. And that then helps bring both those levers up. And also market conditions come into play here, all sorts of other stuff. That's a good way, I think, of looking at it. Rowie, good to hear from you, pal. Happy New Year to you. Great as always. He says, I appreciate your support, pal. You are always here. Brad says, the podcast all over, mate. That's why we keep tuning in. Thank you, Brad. Appreciate you, pal. Happy New Year. Monique says. James says, I trade. It was a great session. Thank you, Monique. I trade momentum for one commodity and trend for another. Okay. That's a good approach. Good comment, James. Thank you. Yes, something I actually missed, and that's very pertinent. Absolutely, you can have this. And James is saying he trades momentum for one commodity and trend for another. You're right about different mindsets. Very good observation, James. I like it. So what James is saying here, if you haven't grasped it, is he uses one vehicle for his momentum trades and one vehicle for his trend trades. And I think that works actually very well when you're trading the different time frames as well. If you're a swing trader, you might say, well, I swing trade this asset class and I day trade this asset class. And it helps you, again, separate your mind and put a different head on, a horrible analogy, put a different cap on, that's better, put a different cap on, because I'm trading silver, I'm trading momentum, I'm trading gold, and I'm trend trading. I think that's a very good way of looking at stuff. Austin says, Happy New Year, Mark. Looking forward to the series. I am too, Austin. I put a lot of stuff into this, and I'm also aware that it's not for everybody, and sometimes I go off on a tangent and I bring it back. So I'm improving with time as well. But hopefully, you guys, I always think, you only need one or two little things, and that's going to kick your trading up again. That's always in my mind when I'm coming up with stuff. I think give some love for the slides, man. Armin's been designing these slides, and I think he's done a great job with the refresh look. Anne says, thanks, man. I learned something new today. Appreciate you, and I'm glad it's helped. Maybe see you next time as well. Give me a new way of looking. Thank you, Pamela. Appreciate that, Pamela. Good question here from Jangir. Jangir says, how do you avoid over-analysis of potential trades? I find this the most difficult. Thanks, Jangir. This is the curse of the intellectual person. If you have a modicum of intelligence, unfortunately, as a trader, that goes against you, because you're constantly looking for ways to, how can I make this more of a dead cert? How can I look for a reason not to take it? And at some point, you have to go, I've got all the information I need. I'm in an uptrend. I've got my filters matched. Filters and triggers might be a way you process your trades, whatever that might be for you. And I've got my trigger bar. So let's say, for argument's sake, Jangir, that you have moving average crossover. And I wouldn't suggest this, but let's say you do, as a filter and trigger. And you go moving average crossover, and then I want to see the market break through the prior day's high, and I'm long. For example, super simple. I'm sure there's some people out there trading like that. I think there's more edge to be had, but hey, once you have your filters matched, the moving average crossover, and your trigger, the high breaking from the prior day's high, there's nothing more you can do. If you are overanalyzing it, you are pretending, and you are saying to yourself, I think I need more data to make a better decision. And at some point, more data does not equal a better decision, it equals noise. And it is, sadly, the kind of, I say, the curse of the intellectual, I don't pass myself that at all, but we are used to thinking about things and problems and thinking through things, using our brain power to solve something. And so we often put our brain power into solving. I'm so excited, I'm whacking the microphone. Brain power into solving trading. The brain power needs to go in the extracurricular stuff, the homework, the reading, the notes, the analysis, the journal reviews. That's where the brain power goes in. Actually, when you're in the heat of the moment, Jangir, you go, market does this. When it does that, I'm clicking the button. I'm not going to second guess it. I'm not going to look at anything else. Nothing else I need is going to help me make a decision. We're in the business of making a decision on incomplete information, Jangir. That's where our edge comes from. If we had a complete information, there'd be no edge. So at some point, we have to go, I've got enough, ready to go. Maybe you haven't got enough yet. And you go, I need to wait until see this bar closes. That would be one example of what you might want to wait. But you don't need anything else. You don't start digging into X or social or news or seeing what a correlated market is unless it's part of your flow. So it's having a process, sticking to it and saying, you know what, I can't outsmart the market. I can't outthink it. I use that intellectual power in my extracurricular homework. But when it comes to trading, you've got to be kind of relatively simple with it. Beth, good to hear from you, Beth. Thank you so much for the super clear, useful webinar today, Mark. You're very welcome, Beth. I definitely had a bit of mismatch mindset trading NQ'd in the London session. My plan was solid to enter at the previous day's opening price with the ideal target at prior day high. The price was grinding before 1 p.m. and I exited my long position early. In the end, the plan itself was right. Much appreciated, Mark. Yeah, Beth, this isn't a silver bullet of you'll never get a trade again and it always goes, or you'll never get a trade wrong again, or you second guess a trade. Of course not. But that last minute thinking of, okay, if I'm in at 1 p.m., what do I expect? Like, it might sit around and do nothing. What did it do the other day? It might kind of kick into gear later. Am I prepared to sit through a little bit of chop? Yeah, maybe that's something that will help. Okay, let's run through these questions. I appreciate your questions, guys. There's a lot of great questions here. Really good to see. But I'll whiz through them sort of briefly, but as detailed as I can. If I can't help, I will definitely send you somewhere or direct you somewhere, a website that can. Hello, Mark. I day trade. This is Anthony M. Hello, Mark. I day trade, but I look for a trend beforehand. Sometimes I will only be in a trade for a couple of hours, but it seems like it's still good opportunities to add on at least the first pullback. Thanks to the webinar. Yeah, good one. Cheers, Anthony. It's something that, the rising tide lifts all ships. So you're trying to find a market that's trending, and then day trade in the direction of that. I think that's a great way to approach stuff. How can I message with this app? You just did, Peter. Hi, Mark. Thanks very much. I'm here for the series. I've only been trading with signals up to the last few months, but I'm now realizing I need to learn more about filters. So looking forward to the rest of the series, Andy. Yeah, Andy, listen, my opinion on signals is the useless. I'm sorry, pal. You probably get this as well. And it's a rite of passage. I get it. We all go through the thing of, if I could just get someone who's getting good signals, you might get some success, and maybe you did, and fine. But if you want to build something that's going to stand the test of time, you can build it yourself, pal. You can. You can build a simple strategy. Start off very basic. Start off, with some one specific thing. Opening range breakouts a great place to start. A rule-based approach. Let me get good at trading the open. If you're able to get the open, let me see the variables that are adjusted on that. Let me become an expert on that. Maybe I do this. Maybe I do that. And that stands you in so much more good stead than signals. And why I say about signals, by the way, and it's not throwing any shade at people who want to share their ideas with people. That's fine, as long as it's with the right intent. The problem you have is, traders always go through rough patches. It's the nature of the beast. It might be a couple of weeks, might be a couple of months. I've known great traders who kind of for a year they've gone, can't really do anything, but then they smash out the park the next year. You're not going to be following the signals of that guy losing for another 6 months. You're going to abandon it, and it could be the point where it just starts to turn around. You don't believe this in someone else as much as you believe in yourself, and so it's important to build your own system and your own process. And there's a personality match as well that comes in with that. Okay, John says, hey, John, how you doing, pal? Happy New Year. Great session as always. Can you create a series of mindset responses or character hats via AI? For some reason, I'm thinking Reservoir Dogs, Mr. Black, trend reversal, Mr. White, trending, etc. I like that. You could, and I'm a big fan of AI. This is a great prompt for ChatGPT. Hey, this is what I'm trying to achieve. I'm trying to create a character that is very good at trend trading. These are his qualities. He's patient. He sits through pullback. He does this. Give me some affirmations. Help me get into that role before I take the trade. That's a great idea, John. And then you have these different characters, whether they are from Reservoir Dogs or whether they are from other stuff. So before you go, hey, I'm Mr. Black today, or I'm Bill today, or Janet today, or whatever it might be. Yeah, I think it's a great idea. That's a really good idea. Thank you, John. How can I comment? You're commenting, Peter. You're commenting. If there's a question, just type it in here and I'll get to it. Peter. Lee says, hi, Mark. So grateful to be here again. I struggle with these exact issues today. Now I know why and I know how to fix it. Thank you. You're very welcome, Lee. Thanks for being here, mate. Great stuff as always, Mark. I took a ton of notes. Thank you, Toby, for your feedback. Mark says, very informative. If the trigger for a momentum trade is engulfing candle, what's the best way to enter given the price may have moved 2 or 3 ATRs? Therefore, is the bar the trigger to show the institutional interest and the buy is following a pullback, which improves the RVR? Many thanks, Mark. That's a good question, Mark. Personal choice. I mean, you can either look and say, hey, I want to wait for some sort of unwinding. I've seen the volatility expansion, the breakout, the wide range bar, and you're quite right. That does screw up the RVR sometimes. If that's the case and it's too wide, you go, well, what else do I need to see? Do I buy on the first red? Do I buy on the first pullback to a 5-period daily moving average? Stuff like that can work just to reduce the risk in it. Or you kind of use a split stop. and you say, okay, half the stop has got to be below the low, but I might put half at 3/4 of the bar, or 75%, which is 3/4. So I'm not using the full bar, but I don't expect it to come back too much. So you can massage things a little bit, as long as you're not over engineering it, and the thesis is still, hey, this bar should not reverse because this is the start of momentum ignition. So that's still got to be your North Star. But again, you are sometimes in a little bit of a situation. And one more thing you can do with this is the kind of approach that I like, is to get something on and then find ways to add more into the trade. So pyramiding, so that's one time I would like to pyramid in, build the position. The initial entry might not be great, but if it's the start of momentum ignition and you think there's kind of a really long way to go, you're like, okay, let me get some on and let me kind of work into position. I'll get some more on a pullback. I'll get some more. And you can build the position. Then I'm a big fan of kind of doing that if the actual initial entry doesn't really set up as well as you'd like. And that's a good question, Mark. It shows you're thinking about things a little bit more carefully. Foyle says, thank you for the series. Appreciate that, pal. Jan says, hi, Mark. Happy New Year. Happy New Year to you. Thanks for the webinars and your work. Do you combine volume and momentum trading? Do you use volume when trend trading? Oh, that's a good question. Not so much. Most of the time, and it's a generalization, I do have volume on my chart, as you kind of saw with some of the screenshots. I like to look at volume relative to normal volume, and there's an indicator for that. Maybe I'll put that on the site or send out via an email on my daily email. I send an email every day. I'll add that to one of the emails. I like to see what's different. I like to see a change. So when we've got a wide range bar, wider than normal, someone cares. Someone with some higher time frame money, if you like, cares. That tends to be linked to volume. It tends to be correlated with volume. Bigger volume bar, bigger range bar. Now, if you're trading individual shares, volume becomes much more different because the delta can be huge. You can get 10 times, and that's more important. You're trading futures, you're trading FX, obviously not centralized exchange, commodities, etc. A wide range bar is just going to mean more. It's going to be more participation. So what's my short answer for that? Yes, but I don't make a major decision on it. I prefer a range, but I think they kind of correlated. Good question, Jan. Thank you. Jangir, Jangir asked the question from before. He says, thank you. That's a great answer. I appreciate that, Jan Gear. 3-minute time on the desk, execute. Lee, that was the question answer you gave to Jangir, I guess, overthinking. Yeah, that's a great one. I got a timer myself. I roll it. I put 3 minutes. I use it for many different things, actually. Even coming up with this content, thinking, okay, well, how can I think about this? And I'm stuck, and I go, right, let me give myself a timer. Think about this. How am I positioning this? What words am I using? That trading. Hey, I want to hold this. A good one is pulling the trigger. Set 1 minute timer, 3 minute timer. Do it. Another one is if you're in the position of a trend and you have the urge to come out, and you're like, set a timer for 5 minutes, 3 minutes, 15 minutes, whatever time frame you're trading on, hit it and say, I can decide to come out of it after the time is done, but I must not yet. That just helps you stop, think, break the circuit of panic and of going crazy in your mind, and just really, really calm things down. Really useful investment, this, whatever it is from Amazon, I don't know, 4 quid, 2 quid, 10 quid, whatever quid, worth having. Don't use your phone, because once you get caught on your phone, you know what it's like. You emails, this, that, the other. A little timer as well handy. If you're borrowing your wife's, make sure you give it back, because otherwise you won't get any dinner, or husbands. Kirk says, considering we are all lone workers trying to identify direction of an unpredictable beast, your session we are lone workers. That's a very good way of putting it. Very eloquent, Kirk. Your session has helped refresh previous info, and I need to revisit them. Thank you. Thank you. Mateus, what macroeconomic book would you recommend? Oh, I don't really know. What macroeconomic book would you recommend? Here's how I'd recommend learning a little bit about macroeconomics. ChatGPT, and following, let's say, the Pepperstone analyst, Michael Brown, on X, copying some of his tweets or posts, whatever they're called now, and say, what does this mean for... so he says, let's say it says ISM is 50 points something, and ask ChatGPT, what does this mean for the economy? What does it mean for gold? What could it mean for dollar? Now, we know it can get it wrong, but I think that's a very good way of understanding the macroeconomic environment now, and then expanding your knowledge out of that. So understanding, hey, how's liquidity affecting things? How is a reduction in interest rate affecting things? Using that as your starting point, and then going into things like, what's the NFP number, and what is this? How does this affect that? Because as traders, unless you're a macro trader, you only care about the driver of the market at the moment in time. The driver of the market at the moment in time is inflation, it's interest rates, it's tariffs kind of gone off the boil a little bit, it's liquidity coming into the market, it's the AI bubble or not. That's what's driving the market. So that should be something to study and understand if you want to. And then if you want to improve your knowledge from there, you can kind of go in all sorts of directions. But as a trader and not a macro guy at all, I think that's a good way to start, if that helps. George says, tell people to use the screenshot function to go with their notes. Yeah, good idea, George. Screenshotting some stuff when you're writing your notes. Appreciate that. Yusuf says, I'm so glad to be here. I'm still a new trader. You're welcome, Yusuf. We're a little bit more advanced, a little bit more intermediate stuff, but you're very welcome here. Or go out and do some digging and some early newer stuff if you'd like. 2 more questions and we're done. I appreciate all your questions tonight. I do. Thank you, ladies and gents. Martin, can you rely on FX volume as there's no central exchange like stocks? Not really, Martin. That's why I don't tend to look at it so much. It's not bad, proxy. It's not bad, but you're never going to get like a 10x. Well, when I say never, it's probably someone's got an example somewhere. Rarely going to get like a 10x of average volume in yen versus the normal, as you might do in like some sort of mid-tier stock. So that's why I think range is a good proxy for almost anything you trade, because a wide range is decent participation. That's what volume is telling you, right? Very rarely, I can't even think of when last time you get a large range and you would get a low volume with it. Or maybe it's a rogue print or something, right? You get a rogue print early in the morning, that might show up as a wide range on a daily chart, and actually it's quite poor. But you could see that from going to a kind of 5-minute chart and saying, oh, actually, it was just a rogue print at 2 a.m. So, yeah, range is probably quite a good thing. Chris says, will this be posted on YouTube or some other way to replay? It'll be on the website, Chris, go tradersmastermind.com. Look at webinars. We'll have it up there as soon as Pepperstone sort the recording. And I think they have it on their YouTube channel. There's a bit of a delay to reward people who show up. And I think you get a copy of the recording sent from GoToWebinar as well. I think that's the process. But thank you, Chris, for being here. And thank you, Mateus. Thank you. All right, ladies and gents, thank you so much. It's been a pleasure. We're back next week with more goodies to help you improve your trading. I hope this helped this week. I enjoyed it. I appreciate you all. Take care. See you next time. Bye-bye.